All right. Thank you, Tim, for joining me today. I just kind of wanted to run through a little bit of what a first-time buyer can expect, what they need to know, what you need to know from them, and kind of, let it roll. Tell us a little bit about who you are, and the floor is yours.
Awesome. Hey, John, thanks for having me on. I know we've worked together for a long time and we,
It's
we
like,
know
can
each
you?
other.
It's
We know,
almost 20 years, man.
yeah, and we both have a lot of respect for how we take care of our clients. And I appreciate you having me on the call because it's always nice for, one of the Fannie Mae and Freddie Mac, I think it was Fannie Mae did a study, and one of the biggest reasons people don't buy is because of the fear of the process. And
Yeah.
so maybe understanding the process for a first-time home buyer is going to make them more comfortable. And as we've seen now, people who didn't buy that 10 or 20 years ago are in a much different situation than people who did, especially those that locked in the low interest rates and they're built net worth. And so it's a big deal. Buying a home built net worth, it locks in the cost of housing. It allows you when you're older and retire to have something paid off versus escalating rent. So I'm a huge believer in this. I watched my grandparents do this, and this is why, quite frankly, I do this and I have a passion for it. So for first-time homebuyers to get started, the first thing they need to understand is those points I just made, that it is a worthwhile thing to do because of what a difference it can not make, not just in your life, but your family's life and for generations to come financially. First
Oh,
off, you lock
absolutely.
out inflation, right? So what's the process? Well, process is first you need to figure out, are you in a position to buy it? And I always tell people, it's not about if, it's about when. Don't be afraid to contact us, especially on the lending side, to figure out what you can do. And if you're not in a position, we can help you get into that position sooner. So what does that mean? Oh, my credit's not good, or I've got too much debt. And we're going to look at income to debt ratios. How much income do you have as compared to the payments you have on the house, on the cars, on the student loans, on the credit cards? Well, maybe that's something you need to work on. We're going to work with you on that.
Sort of
Credit's all right.
create a plan to get to the right
Correct.
position. So, okay.
Right. Because I mean, real world is that you when you go to college, like you don't know what you're going to graduate with even, but you do start a plan, like you start going, or anything you start, there's a starting point, and you don't always know where you're going to end up. But if you don't start, then you just sort of never get to your destination. And look, we're experts at showing you how to get to the point you need to be at so that you can consider whether it's right to buy a home. And maybe for you right now, it doesn't make sense. But like I said, not if, but when. Let's get you to the point where it says, when does this make sense?
It's
Because,
like get that conversation going, get it
yeah,
started, and start building out
right,
like, okay, what do I need to do to get to a position where I feel comfortable to,
right.
pull the trigger on an offer. So,
And let's guys, you're not gonna pay anything to have that conversation. You're not gonna pay us anything. You're not gonna pay John anything until you buy a house. In fact, the sellers, are paying for the real estate fees. The lenders are, charges. And then again, one thing that buyers have to understand is like there's down payment and there's closing costs. Can we get down payment from down payment assistance? Can we get closing costs from sellers, depending on the market? All these kinds of things are things we can work through. But one of the first things we do is we're going to look at your credit. Credit is really going to determine which loan programs are available to you, including down payment assistance if you need it.
okay. So,
Um,
do you need to do like a hard credit pull right away or a soft credit, or does it really
I
matter?
mean, it's
Like,
better to do the hard pull and get all three agencies and really work through it. And I know a lot of people, oh, it's going to screw my credit because I ran my credit. It's not true.
okay,
Back when FICO scores came out 25 years ago, it used to impact things. Now you'd have to have a run on credit for multiple different industries within a 3-month period of time to have it impact your scores.
okay.
What people get a misunderstanding of is that they have their credit run that goes down and they go, oh, it's because my credit was run. No, it's because you have a larger amount on your revolving credit card than you did the last time.
Oh, got
So it has
it.
very, even though it come up as one of the determining factors, it's very minute. I financed probably 7, 8 mortgages during the pandemic, right? My refinancing my rentals and all that kind of stuff. And my FICO score never went down unless I had the business and stuff like that, different balances of my credit cards. In fact, my assistant pays my credit cards off literally twice a month.
Okay.
Just to make sure, because that's what the happen is. So don't worry about that hard pull. It's really not a big deal. There are ways that they're working on actually doing the soft pull to give us the information we need, but it's just not there yet. It's starting to happen. So if it can be done that way, great, but it's not much of an impact. And the reason we're doing that, by the way, isn't because it affects your credit scores to try to do those soft pulls. It's because it causes trigger leads, and then everybody and their mother starts calling you because the credit agency, TransUnion, Equifax, and Experian sell your name off. So you can opt out of that, by the way, through government sites, so that you don't have your name sold off and your personal information go out to these companies that are just hammering you. Literally, at times get like
That's really
100
good to know.
calls. Yeah, like 100 calls. It's ridiculous. So let's get into what does it take to get you pre-approved, and to at least get down on the path. Well, we're gonna run credit. We're gonna get your credit scores. We're gonna figure out what your debts are, and we're gonna figure out what your income is. Whether you're W-2 or your sole proprietorship of a business, or you work for a corporation, all those kinds of things we have to consider. Then we're gonna look at what kind of down payment do you have, and so based on down payment and credit scores, that'll determine the programs available to you, whether it's down payment assistance, whether any of that stuff. So then we can start looking, okay, well, if you have this much down, and these are the kind of, and you can go up to about 45% of your gross monthly income with all your debts, including the housing expense, sometimes higher, depending on the situation. Then we can start telling you like, hey, this is kind of your purchase price range. And that's when you go to John and say, well, what's available for me in this purchase price range? Now, let's be honest. We're going up to 45% of your gross monthly income. You may come back and tell me, hey, you know what? I'm not comfortable with that payment of $3,500 a month. What does $3,200 get me? And then we go to John and say, look, they're really only comfortable, they can qualify for more, but they're really only comfortable up to this level. And that's when you start doing the search for areas and homes.
Got it. Okay.
Right? I mean, John, you know this as well as I do. It sounds so simple.
Well, I'm a big believer in like create your budget, have an idea of what you're comfortable with your payment, and then going, all right, this is what I want to do, not going, okay, this is how much I make. What's the maximum you can lend me? Because I'd rather have you more comfortable in your budget. And then if we find a property that's outside of that, we can go, you know what? I can afford a little bit more. I can go up. And so I'm a big believer in, don't just because you can borrow that much, you have to spend that much. So it's just one of those things. Now, one of the questions I have written down is, should a buyer actually go through and get just a standard pre-approval, or do what we did, and get a fully underwritten approval and go that extra step, so that when we're shopping, we're basically saying, look, we got the loan, we're ready to go. We want to, which is the better strategy right now? Or is it more with first-time buyers, don't worry about that fully underwritten approval?
So, great question. I'm going to say it kind of depends on the market to some degree. But let's kind of go over the different levels of how you position yourself to be the strongest buyer. Because when you find that house that wraps its arms around you, and you want that house to mate with you for life, you're going to figure out what you need to do to get there. And so
you found your dream house. Yeah.
You do not want to lose that house once you have it. And guess what? You're not going to be the only one that feels that way. So how do you position yourself to be the one that wins on the offer? Especially in first-time home buyers, it's even more important because many times they're not coming in with a ton down, and they're competing with people who might have sold the house and are, or even paying cash. So let's look at the different levels of how you get approved. So some people will go out there and say, oh, pre-qual. I talked to you on the phone. I went over your numbers. I ran the credit, but you haven't sent me any documents. So there could be surprises in there, like large deposits we have to explain, or maybe your income's not really broken into the way I think it is, commissions, bonuses, and that stuff. And I need 2-year histories. There's a lot of things that can be surprises in a file if I don't have the documents. So that's called a pre-qual. Now, pre-qual to me is not worth the paper it's written on because nobody's verified the documentation, the income, the down payment, any of that. A lot of banks do that and get themselves into a lot of trouble. And that's why a lot of realtors don't like to deal with banks in a lot of instances because they do pre-quals, but they don't do the actual pre-approval, which is the next step. Pre-approval is I run the automated underwriting. Fannie Mae, Freddie Mac, a lot of these systems use what's called an automated underwriting. But good information in gets you a good answer. Bad information gets you a bad answer. So if you don't have that documentation, meaning the paycheck stubs, the W-2s, the tax returns if needed, the other, properties, if you have other rental properties, all that kind of information, bank statements, retirement funds, then you haven't really verified what's going into the automated underwriting system to get that automated underwriting system to say approve. If you can't verify it, the underwriter's not going to be able to verify it and your approval could change. So again, a pre-approval, pre-qual is just, hey, conversation on the phone and maybe credit. Pre-approval is credit. We're running ratios. We've got the documentation, pretty solid. But if you want to go to the next step, then it's called, with us, it's called a CIA, credit, income, and asset approval, which means everything but the property's been underwritten. Your credit, your debt to income ratios, we've proved your down payment. The only thing that we now have to provide is a purchase contract that shows like, hey, you're in contract on when to close. The title information, make sure there's no issues on title, which is basically, how the property is recorded. Are there easements? Are there liens or problems on that property? And then the appraisal to make sure the property value is there. So at that point, when you do what's called the CIA or full credit underwritten approval, you're as good as cash in a lot of instances because now you can close in 15 days or even 12 with the TRID stuff if you're really moving fast. But now you can tell the seller, like, look, as long as your property appraises and we're good to go, like we can close on this. And a lot of times that does put you in a better position because as you and I both know, John, when people come in and say they're paying cash, a lot of times, well, they're paying cash or they're pulling it from somewhere else, or they're trying to renegotiate the deal once it's accepted and bring and really hammer the inspection to try to renegotiate the deal. Cash isn't always king.
Well,
Have
at
you
the
seen
end of the
that?
day, like, does it matter if you get a cash or a loan? Because the seller's just going to get a wire from escrow anyway. So they
Right.
just want top dollar and the best scenario from themselves. So I think, yeah, I don't really see a difference when I'm on a listing agent between cash and a loan, as long as the loan is solid and there's no issue there. So,
Right. And that full credit approval, I mean, honestly, if you're going to be at that level and you're going to be making a purchase, then it also takes a lot of stress off the buyers and the sellers and the agent because we know it's all done. But really, the buyers, you're going to get into a contract. Now you have inspections to do. We have appraisals. You're going out there to get homeowners insurance. And some of those things are now you've got a lot on your plate. And that's why you want to have, if the loan's kind of taken care of, other than maybe an updated paycheck stub or whatever else, it is a much smoother transaction for
absolutely.
you without a doubt. And it's smoother for me as
Absolutely.
a lender.
Well, it makes both of our lives so much easier when we're not scrambling for page 4 of some document at the last minute. And it's like, no, 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 that's all done. All we need
Oh,
title, escrow, appraisal, and we're golden.
absolutely.
So it's
And
just, again,
honestly, it makes the stress level of the buyers. I mean, they always talk about, oh, this last thing happened in the 10th hour and the underwriter wanted this and all that. It's like, none of that happens.
yeah,
Like it can be done easy.
yeah. If you
Oh,
front load all that paperwork, then you don't have to worry about it at the end because it's already done.
yeah.
Absolutely.
Yeah. I mean,
Absolutely.
so for me, the other thing now for first time home buyers to consider is just, really understand, that net worth building of buying a home, that locking out inflation, like I talked about in the beginning, because, um, look, it's hard to make that move, but in the other hand, it's sets you up so much financially for the future that, um, really look into it because even if now's not the time, interest rates are too high for what you want to buy or whatever else, um, you still, again, start on the road. And then if things change, you're already positioned to move faster than the competition is. And you know, John, with people who locked in a lot of low interest rates and things like that, inventory is an issue.
Yes, absolutely.
I mean, there's
Absolutely.
even the logic of, hey, buying even if interest rates are a little high because I'm going to refinance a lower payment later, just so I have choices in inventory. That to me is not a bad argument.
Um, what do, you know, you mentioned interest rates, and I was like, all right, what do you think is going to be happening with interest rates over the next year? It's just that's the
They're going to
big
go down.
question for everybody.
They're going to
So
go down.
yeah,
So you know, I've been doing this for 30 years, and you know, look, take that all with a grain of salt. Nobody flipping knows anything, right? But I've been doing this for a long, long time. Inflation's never lasted more than I think 2 years or 18 months or something like that. We are already seeing numbers that are starting to bring inflation down. Employment is still very, very high. Economy is very, very strong. I know a lot of people want to think, oh, the economy's horrible and all that stuff. You only have inflation when the economy's so good that they're having to raise interest rates to slow it down so that we don't get ridiculous prices in the future. You know, you can look at Argentina and some of those other countries to see what
yeah,
happens if you don't keep it under
140%
control.
inflation in Argentina. It's
Right.
pretty wild.
Yeah, right. And we're complaining about fours and fives and stuff like that. So, I mean, the Fed Reserve is doing a good job of trying to bring it under control. We put so much money into the system during the pandemic that, you know, it has to come out, and it's starting to come out. You can start seeing that. They're talking about a soft landing versus a recession, even though I think 9 times out of 10, when you have an inverted yield curve, lower interest rates being higher than longer term interest rates, that you end up with a situation where the recession is going to come down. But I think, you know, the feds, whoever you want to give credit for it, really, it's the Federal Reserve, and it's supposed to be an independent, so non-political thing. You really do look at, hey, they started a little too late on
Yeah,
putting those rates up there because they're so worried about the economy failing after the pandemic. But, you know, they've risen them, put those
raised.
short-term interest, thank you, raise the short-term interest rates pretty quick and gotten the job done. And I feel like it's going to start coming out of the system. The other
Fantastic.
thing too is first-time home buyers, especially like this time of year where there's not as much demand. People aren't looking at properties and things. You do have the advantage of, like, you can negotiate for a seller to potentially pay for a 2-1 buy down and buy the interest rate down from the note rate for 2% the first year and 1% the second year. And real likely either your income will grow into it, or you're going to probably refinance within that period of time because rates will be lower. So that's another tool you can use as a first-time homebuyer and try to negotiate that. Maybe
That
not
was that was
property.
literally my next question, was about
Yeah.
buy downs. So
Yeah.
it's something that I've definitely seen advertised, especially in the multifamily sector, where they're literally putting it in the description of the
Yeah.
property saying
Yeah.
seller will pay the 2-1 buy down, because that helps them get their price to help you get into the property. So I think buy downs are going to be something that we're going to see a lot more of in the first quarter
Yeah.
and the second quarter. So
So sellers, you have to reduce your price a heck of a lot to have that payment really come down much for a buyer,
yeah,
right?
yeah,
But if you pay for a 2-1 buy down and you're buying the interest rate down by 2% for that first year, that's a significant savings for your buyers. That's going to make your property much more attractive. So rather than, you know, cut your price by 20, if you know that's where it goes, you're much better off to pay, you know, $14,000 for a buy down for the buyer. They're going to be happy and you're going to be happier because you don't have to come down as much. And that buyer now has time to grow into the mortgage, or again, I think they'll refinance to lower interest
yeah.
rates by the time that buy down runs out. And I've got it actually, can I plug my straight up mortgage talk on YouTube?
Oh,
So
absolutely.
yeah, so my straight up mortgage talk on YouTube is where I just really, I'm not out there schlepping loans or doing any of that. I'm just educating people. There are some real good comparisons on like a 1-1 buy down, a 2-1 buy down, a 1-0 buy down, why you would use a buy down as a seller or versus price reduction. So I have a couple of videos on that I think are very good to sort of understand what John and I are talking about right now, because it is a little bit of a confusing subject. But I actually have like screenshots and break it down for you on that, which helps, I think, see the difference, and it's significant.
Okay, great. I'll link that with everything.
Yeah.
So
Look, watch
awesome.
the couple of them. There's one where I like really describe the couple of different types and everything. So, and there's one where I say price reduction versus a buy down and why you would do that. So those both are, you know, I don't want to toot my horn, but people have watched them and said, oh, okay, now it makes sense.
Well, that actually leads into my next question really
Okay.
well. What information is on the internet right now that is just absolutely wrong and driving you crazy because people are saying, well, I saw it on this or I saw it on that.
So here's
And
the deal. I've been around, sorry to cut you off, but
yeah,
boy, this is why I started Straight Up Mortgage Talk, because there was so much misinformation out there. I wrote a book, and that was
it's
like
on my desk.
15, 20 years, thanks. 15, 20 years ago, for people to just be able, in fact, a person who was an advocate for homeowners and did seminars and all that stuff, asked me to write it with her, Elizabeth. And so that started a long time ago. So whether it's on the internet, whether it was in the newspapers, whether it was whatever, flyers, whatever, what the biggest like issue is that when people advertise rates, they advertise that if somebody put 40% down and have 780 FICO scores, look, there's a rate for every different situation, whether you have 3.5% down or 40% down or whatever credit scores, there is no one rate fits all. And when they advertise these things as if that's going to be the payment on the house for that bar, you might be the top 3% that gets that loan, but more than likely you probably aren't, especially as a first-time home buyer. You could be, but we don't know that. The second thing that makes me crazy is a lot of times all they're showing is the principal and interest.
Yeah.
And they're showing it based on 20% down. So there's no property taxes in there. There's no mortgage insurance if you're putting less than 20% down. And there's, just the principal and interest payment based on a payment, down payment that you're not even putting down. So that's the kind of thing that really drives me nuts, is not giving a person an accurate payment. I've seen people that are almost ready to close and they don't understand that the taxes, insurance, and all that kind of stuff. With TRID, a little bit of a call out. Everybody hated when TRID came out, which is the disclosure process where people get those disclosures early, and it shows whether it's an adjustable, it shows whether the taxes and insurance are included in the payment, all that. Has really taken a lot of that out. So guess what? Our government did something very nice that actually gives those buyers protection up front to see the numbers early. But it's still, a lot of times when people are pre-approved and everything, like TRID doesn't happen until you have a property.
Yeah.
And so they all of a sudden they think their payment's going to be one thing, and there's all this other stuff added on. Especially when I've seen some of these online deals, is I see a lot of times they are only advertising principal and interest.
Absolutely. And just, that's why it's PITI. We, always
Right?
PITI. So
Yeah, and even association, like, is it included in the payment? Did you show it to me or not? If it's an association. So I think that's probably the biggest thing. And the other thing on the internet that makes me crazy is that, and this is kind of with anything on the internet, they tend to try to make it look better than maybe reality. Whether again, it's just the principal and interest, or, oh, everybody can qualify for this loan, or it's just, there's a lot of misleading information, a lot of misinformation. And so that's why I like people like you and I that have done this forever, going out there and doing these things and just saying, look, here's the reality. And on Straight Up Mortgage Talk on YouTube, there's a lot of that reality stuff. If you want to get educated about stuff, what is mortgage insurance? What are the different types? I glossary of terms, instead of just say, here's a glossary of terms, and I actually verbally explain what it is. So I say what it is, but then I say, this is how it applies. And so I spent a lot of time on that stuff. And again, it wasn't because, oh, I'm getting paid for this or anything. It was because I thought there was a real need because of the misinformation out there.
Oh,
But
absolutely. And it's great. And I love the book. And this is why
for
I
sure.
did all those series on Instagram about like, this is what this term means, and this is what
Yeah,
it means in
yeah,
practice, or
yeah.
this is what this form does, and this is why it's important. And I
And I
tried to
loved
just
watching
break it
that.
down.
And I
So
loved watching those because I was learning, hell, how many houses have I bought? How many transactions have I been in? But I'm not a real estate agent.
yeah.
And so when I was able to have you talk about, oh, well, best value is doing this to the house. How do you stage a house? How do you really do it? Is it worth it? Like all that kind of stuff that you do that I don't really see, because I'm locked in my office figuring out the financial part. It was fascinating to me to kind of go, like, I'm getting educated on stuff that you would think a guy like me would know. And I'm like, I don't, without John telling me now. Pretty cool.
Well, awesome. This has been fantastic, Tim. Really appreciate this. We should do more of these, but yeah,
Yeah,
just
as rates come down, I think in the first quarter, I think we really will see some changes that are worth sort of looking at. I mean, one of the things too, just, and again, it's kind of out there right now. That's kind of big news for first time
Mhm.
home buyers and stuff, especially, in LA and, where it's expensive, is that low loan limits have gone up again. And
Yeah.
so Fannie Mae, Freddie Mac and FHA are going up, to pretty good dollar figures now. For especially first time home buyers, it's going to go up, they've been up there. Interesting thing is that San Bernardino, Riverside County actually didn't go up on FHA because we didn't have an actual increase in the median home sales price.
Interesting.
And you want to know why I guess that is? All the people that could work from home during the pandemic and were willing to buy further away from jobs in Orange County and LA can no longer do that because it's more required to be in the office, at
So
least
they're
a
having to
couple
come
times.
back to the office. Got it.
So
Okay.
they're not willing to go out as far, right, to San Bernardino and do the drive now because they are actually having to do the drive. So new buyers are again, I think, trying to stick closer to the work areas.
Okay.
And
I
that's why
like
you
that.
still saw LA, Orange County still have price increases.
Okay. And I
That's
definitely
my
think,
logic.
no, we're definitely gonna have a lot of interesting
Yeah.
changes in lending. And then with all these lawsuits in real estate, agent
That's right.
compensation is about to be completely changed, I think. So we're gonna
Well,
have a lot of changes coming up. So
I want to do a whole nother one on that because I'm super curious about that. I don't know how that works. So we'll talk offline,
yeah.
but maybe I'm not the person for that. But if you do an interview on that one, I want to watch it
All right.
because I'm
Sounds good.
confused on that whole thing. All right, John.
Awesome. Thanks, Tim.
Good talking to you.
All right. Have a good one.
Bye.